Once upon a time, a small software company changed the world. From a dusty garage to the cloud that connects billions, Microsoft became more than a name. It became the backbone of modern technology. But behind the screens, how strong is this giant today? Let's find out. Hello, everyone. Today, we're diving deep into Microsoft, the tech titan of our time. So, is Microsoft still a safe bet for investors, or are there clouds gathering on the horizon? Today, we're diving into Microsoft, ticker MSFT, listed on the NASDAQ. Let's see if this tech giant is still worth holding in 2025. Microsoft designs, develops, and supports software and digital services used all around the world, from Windows and Office to Azure Cloud, LinkedIn, and even Xbox. Microsoft touches almost every part of modern business and personal life. It's not just a software company anymore, it's an entire digital ecosystem. When we look at its business segments, we can see how diversified Microsoft has become. Cloud and productivity tools now bring in the majority of revenue, while gaming and hardware are secondary, but growing. Geographically, income comes from every region, confirming that Microsoft is a truly global business with balanced exposure. Now, let's look at the stock price over the last 5 years. Despite market corrections, Microsoft has shown strong and consistent growth, significantly outperforming the NASDAQ average. That's a sign of investor confidence and solid fundamentals. Next, the revenue chart. Revenue climbed from around 140 billion USD in 2022, almost 250 billion today. That's a remarkable increase. Steady and sustainable growth year after year. This trend clearly shows Microsoft's ability to expand even in a challenging economic environment. Then the net income, profits followed the same path, growing from roughly 40 billion to nearly 90 billion United States dollars. That is an impressive margin for a company of this size, proof of strong pricing power and cost control. Free cash flow is next, and it's one of my favorite metrics. Microsoft generates around 60 to 70 billion United States dollars every year in free cash flow. That means a lot of flexibility. They can invest, pay dividends, or buy back shares without borrowing. Very few companies in the world can do that. Now the operating margin, how efficiently the company turns revenue into profit. Around 40%, and it's been stable for years. That's excellent for a mega-cap tech company. It shows management, discipline, and strong product mix. Let's check the earnings per share. EPS grew steadily over the last decade, from about 5 United States dollars to more than 11 United States dollars per share. That's pure compounding. Long-term investors love this type of chart. Slow, predictable, always pointing upward. The PE ratio now, currently around 35. That's higher than the market average, meaning investors are paying a premium for quality and stability, not cheap, but justified if growth continues at this pace. What about the dividend? It has been increasing every single year. Microsoft isn't a high-yield stock, but the dividend is safe and backed by massive cash flows. Perfect for long-term investors who like both growth and income. And the long-term debt, around 40 billion United States dollars, which is low compared to cash reserves and annual profit. That's a very healthy balance sheet. Debt is under control. No red flag here. Let's see what analysts think. Most rate Microsoft as a buy or even strong buy. The consensus target price still gives upside potential, even after recent highs. Analysts clearly trust the company's vision, especially in AI and cloud computing. Now, the strengths. Microsoft is the global software leader with a powerful ecosystem connecting Windows, Office, Azure, and LinkedIn. It has diversified revenue streams across software, gaming, business tools, and now AI infrastructure. Few companies combine innovation and stability like this one. Of course, there are weaknesses too. Microsoft still relies heavily on Windows and Office for profits. That's a concentration risk. It also faces fierce competition from Google, Apple, and Amazon, especially in the cloud market. And as a giant, it's constantly watched by regulators, which could limit future moves. Now, my personal view, I am a shareholder of Microsoft, and I plan to keep it for the long term. It's a company with a strong moat, consistent growth, and solid cash flow. Leadership in AI and cloud makes it one of the safest and most innovative tech stocks in the world today. But remember, this is not financial advice. Always do your own research before investing in any stocks. Your money, your decisions. Thanks for watching. Like, share, and subscribe for more weekly stock analyses. And tell me in the comments which company you want me to review next. See you soon.